Good morning, good morning. My name is Mauro, and I would like to welcome you to the Mobile Home Park Rehabilitation and Resident Ownership Program, otherwise known as MPRROP. This is the webinar where we'll be covering some aspects of the NOFA and also portions of the application. So welcome, and what I'd like to do is, as my first step, is I'd like to introduce the team that will be making the presentation today. And the team members are as follows. We have Conant Ratcliffe, Gabriela Navarro, Gail Melendrez, Kara Thompson, Brandon Bolden, and Ina Brent. These are our representatives that will be working with the program as well as making the presentation today. Again, my name is Mauro Lara, and I am the program manager. Okay, and at the bottom of the screen there, it said send all inquiries to our inbox at mprop@hcd.ca.gov. Unfortunately, our presentation today is not interactive, which means that we will not be able to field questions as the presentation is taking place verbally. Unfortunately, we can't talk back and forth, but we can field questions through our email inbox. So if you have any questions during the presentation, please feel free to email your questions to our MPROP inbox at mprop@hcd.ca.gov. A couple of our team members are monitoring that inbox, and we will be trying to respond as quickly as we can to the questions as they come in. Also, at the end of the presentation, we will be having a question and answer period. We'll follow the same format through the email inbox, but what we'll do at that time is we'll be reading as many of the questions as we can get to and providing the answers to the best of our ability at that time. So thank you for that. Our agenda today, I wanted to go over our agenda, what we're going to cover. So the items on the agenda, as you can see on the slide there, we're going to cover the background. We're also going to talk a little bit about what's new in this NOFA from the previous NOFA. We'll talk about the purpose. We'll talk a little bit specifically about this May 2020 NOFA. We're going to talk about eligible applicants and activities and about project eligibility requirements, as well as non-eligible projects. We're also going to cover types of funding, and we're going to cover the application. As a background, we can share that MPROP is authorized by the California Health and Safety Code, Section 50780, Chapter 11 of Part 2, Division 31. And regulations are found at Title 25 of the California Code of Regulations, Section 8000. And now what I'd like to do is I'd like to introduce our first presenter, Ina Brent, who will be taking the next section in the presentation. So Ina, please take it away.
Thank you, Mauro. What's new? What's new for the MPROP program this year is that the NOFA amount has increased from $15 million to $34 million. In addition, the max requested loan amount has increased from $3.5 million to $5 million. That is an increase of $1.5 million. MPROP loans made after January 1st, 2019 are now deferred payment loans. The MPROP program has two new eligible activities: rehabilitation or replacement of a mobile home. Please note that this is only available in parks that have previously received any MPROP loan. Also, the natural disaster park replacement. I will now turn it over to Kara Thompson with Purpose.
Thank you, Ina, for that introduction. There is $34 million in total from the Mobile Home Park Rehabilitation and Purchase Fund for the Mobile Home Park Rehabilitation and Resident Ownership Program. Approximately $19 million is available to convert, acquire, and/or rehabilitate existing mobile home parks in order to preserve them as a source of affordable upgrades or replacement mobile homes. Approximately $15 million is available to fund loans for the construction or reconstruction of a mobile home park to replace one that has been destroyed by a natural disaster. I am so sorry. I'm going to back up. I think that I was off on a slide on that one. The purpose of the MPRROP is to encourage and facilitate the conversion of mobile home parks to resident ownership by a qualified nonprofit housing sponsor or by a local public entity, or to construct or reconstruct a mobile home park to replace one that has been destroyed by a natural disaster. The goal of the program is to protect low-income mobile home park residents from physical and economic displacement, to obtain a high level of private and other public financing for mobile home park purchases, and to encourage and facilitate the conversion of mobile home parks to resident ownership or ownership by qualified nonprofit housing sponsors or by local public entities. This program originated in the mid-1980s with the original intent of preserving mobile home parks as a source of affordable housing for low-income residents. Funding for this program is from registration fees paid by mobile home park owners into the MPRROP revolving fund. For the May 2020 NOFA, there is $34 million in total from the Mobile Home Park Rehabilitation and Purchase Fund for the Mobile Home Park Rehabilitation and Resident Ownership Program. Approximately $19 million is available to convert, acquire, and/or rehabilitate existing mobile home parks in order to preserve them as a source of affordable upgrades or replacement mobile homes. Approximately $15 million is available to fund loans for the construction or reconstruction of a mobile home park to replace one that's been destroyed by a natural disaster. These funds can also be used to assist park residents with needed repairs, accessibility upgrades, or replacement of mobile homes. This is only available to parks that have previously received an MPRROP loan. 20% of the $19 million is reserved for rural projects. If the department does not receive enough feasible rural project applications based on the criteria during this funding round, HCD may allocate these funds to non-rural projects. HCD will be accepting over-the-counter applications. This means the first complete and eligible applications received will be the first ones to be reviewed. All applications received on the same day will be assigned an order of receipt based on the time received. Applicants can submit their application beginning July 6, 2020. All applications must be received no later than 5 p.m. on January 6, 2021. We will announce awards beginning in August 2020. HCD will accept applications over the counter until we have received enough eligible applications to reasonably use all the funds currently available, or the NOFA application deadline, whichever comes first. I would now like to introduce Gabriela Navarro, who will be reviewing eligible applicants.
Hello and good morning. I'm Gabriela Navarro, and I will be presenting the next two sections, which include eligible applicants and eligible activities. Eligible applicants. There are three types of eligible applicants. A resident organization, which is a group of mobile home park residents who have formed a nonprofit corporation or other legally recognized entity. Another eligible applicant is nonprofit, a qualified nonprofit housing sponsor. And third is a local public entity. Please note that all applicants must be a legally recognized entity that can enter into a contract and is capable of suing or being sued. Resident organization requirements. A resident organization must meet the following requirements. It must be organized as a legally recognized entity, must demonstrate representation of no less than 2/3 of residents, and must be able to submit articles of incorporation, bylaws,
and an authorizing resolution to borrow MPROP funds. Nonprofit housing sponsor requirements. A nonprofit housing sponsor must have tax-exempt nonprofit status under Section 501c3 of the Internal Revenue Code. It must have the ability to submit required documents to borrow MPROP funds, and must be able to demonstrate experience with development and operation of publicly subsidized affordable housing or mobile home parks, and formal arrangements for ensuring resident participation or input in the management of the park. On the application, in the Applicant and Project Info tab, HCD will ask for how your organization meets the experience requirement. There will be a narrative section and an experience chart that will ask for projects completed in the last 5 years. Please note, limited partnerships also qualify when all the general partners are nonprofit, mutual, or public benefit corporations that meet the requirements of Health and Safety Code 50781, Section K, or page 3 of the NOFA. Local public entity requirements. A local public entity is a county, city and county, a duly constituted governing body of an Indian reservation or rancheria, public district, housing authority, or other political subdivision of the state, and any instrumentality which is authorized to engage in or assist in the development or operation of housing for persons and families of low or moderate income. A local public entity can include 2 or more entities acting jointly. Please see Health and Safety Code 50079 and page 3 of the NOFA for more details. Next, on to eligible activities. Eligible activities. The department may make loans from the MPROP fund to a qualified nonprofit housing sponsor or a local public entity to acquire or rehabilitate a mobile home park, provided that no less than 30% of residents at the time that the loan application is filed are low income. Please see Health and Safety Code 50784.5 for reference and page 5 of the NOFA. Mobile home rehabilitation or replacement grants are only for parks who have received MPROP funds in the past. This is also an eligible activity. For further info, please see Health and Safety Code 50784.7 or page 9 of the NOFA. Eligible activities continued. Additional eligible activities include providing assistance to low-income residents to purchase a space in a park converting to resident ownership. And another eligible activity is the conversion of mobile home park ownership to a qualified resident organization. This can include permissible rehabilitation and repair cost. All eligible applicants can apply for funding that allows for acquisition and construction of a new mobile home park to replace a park that was destroyed by a natural disaster. The new park must be within 20 miles of the destroyed park. Next are some loan features for the eligible activities. So there are deferred payment loans up to 40 years for resident organizations and nonprofit housing sponsors. Our regulatory agreement is required for the term of the loan, no less than 30 years. Deferred payment loans up to 40 years for individual homeowners. Combined loan to value ratio for resident organizations and nonprofit organizations that cannot exceed 115%. There will also be more details regarding the funding types and going into the loan details later in this presentation. Next, we have Kara Thompson, who will be presenting project eligibility requirements.
Thank you, Gabby. Site control must be in the name of the applicant at the time the application is submitted to HCD and enforceable for at least 120 days beyond the application submittal date. The applicant must provide evidence of site control at the time their application is submitted by any of the following: fee title evidenced by current preliminary title report, an enforceable purchase agreement or enforceable option to purchase or lease, a leasehold interest with provisions that enable the leasee to make improvements on and encumber the property, which must be for at least 15 years beyond the award date, provided that the terms and conditions of any lease permit compliance with all program requirements. A disposition or development agreement with a public agency or an agreement with a public agency that gives the applicant exclusive rights to negotiate with that agency for acquisition of the site. When you submit your application, we will be looking for one of these items as an attachment. This information can be found on page 10 of the NOFA. For resident organization project eligibility continued. Resident organizations must include the certification of resident support survey, indicating that 2/3 of the residents support the park conversion to resident ownership. If the park is a subdivision, stock, or limited equity housing cooperative, and individual interests are being purchased, 2/3 of the residents must be buyers of their subdivided space or co-op membership share. Buyers must also participate as members of the resident organization at the time of funding. Membership is generally acquired as a result of purchasing an ownership interest. Applicants can download the Certification of Resident Support Survey from the MPRROP web page. This is located under the current NOFA section of the MPRROP web page. It is available in both English and Spanish. There is a separate certification of resident support survey for nonprofit sponsors and resident organizations. Please use the survey that applies to your application. The information regarding this can be found on pages 11 and page 12 of the NOFA. Please note, if the park is subdivided, a final report is required at closing. So on to site control. Applicants must demonstrate site control as described in slide 29 or refer to page 10 in the NOFA. At the time of the application, the park must have a minimum occupancy of 30% low-income households. There is a section of the application that requires a detailed listing of the residents and their income. This is detailed under standard conditions on page 14 of the NOFA. Qualified nonprofit housing sponsors must provide evidence of resident participation in the conversion and management of the park in the form of either resident participation on the board of directors of the entity that acquires the ownership of the park, or establishment of and consultation with a permanent resident advisory board. A local public entity must have site control but not ownership. Entities cannot use HCD funds to supplant an existing loan or pay itself for the property. At the time of the application, the park must have a minimum occupancy of 30% low-income households. A local public entity must provide evidence of resident participation in the conversion and establishment of and consultation with a permanent resident advisory board. Ina Brent will now review non-eligible projects.
Thank you, Kara. Non-eligible projects. MPRROP has 3 non-eligible projects. First is parks currently owned by local public entities. Second will be refinancing of an existing long-term debt. HCD defines a long-term debt greater than 3 years. And then thirdly, a purchase of a mobile home, except to replace individual mobile homes that cannot be repaired in a park that previously received MPRROP funding. Up next with types of funding will be Gail Melendrez and Brandon Bolden.
Thank you, Ina, and good morning, everyone. My name is Gail Melendrez, and in this section, we will discuss the 5 funding types. I will begin by reviewing the first three funding types: disaster reconstruction loans, acquisition and rehabilitation loans, and short-term conversion loans. The first funding type we will review is the disaster reconstruction loan. Eligible borrowers for this funding type consist of resident organizations, qualified nonprofit housing sponsors, or local public entities to replace or construct a mobile home park that was destroyed in a natural disaster, provided specific criteria are met. As you can see in this slide, the replacement park must be located no more than 20 miles from the original park, or be rebuilt on the site of the original park that was destroyed. And a minimum of 50% of the spaces to be constructed are restricted to occupancy by very low-income households with income not exceeding 50% of the county's adjusted median income. Additionally, at the time of the disaster, no less than 50% of the residents of the park must have been low income. Next, we'll review the costs and terms for the disaster reconstruction loans. As you can see in this slide, eligible costs are park acquisition, loan origination, appraisal and inspection fees, and other related financial costs, title and escrow fees, legal and other professional fees, as well as relocation costs. The disaster reconstruction loans have a maximum 40-year term. The loan amount cannot exceed the lower of the most effective and efficient use of state funds, or $5 million, and 115% of the combined loan to value, which also includes any senior debt. Additionally, the value of the park must be approved by the department. Additionally, the interest rate is 3% simple interest yearly. Payments are also deferred for the full term. However, the department does require an annual fee of 0.42% of the loan amount to cover the department's monitoring costs. Finally, the department also charges a $1,000 transaction fee, which may be waived or deferred at the department's sole discretion. This concludes the disaster reconstruction loans review. Next, we'll review the acquisition and rehabilitation loans. This funding type provides loans to a qualified nonprofit housing sponsor or a local public entity to acquire or rehabilitate a mobile home park. Like disaster and reconstruction loans, the terms for acquisition and rehabilitation loans is 40 years. However, there is an important difference. When a local agency acts as an interim owner, but in good faith fails to transfer the park to a resident organization or nonprofit within 3 years, an additional 3 years may be granted. This funding type also requires that at the time of application, at least 30% of residents must have been low-income residents. Additionally, a program of assistance is required to ensure affordable housing costs for low-income residents remain available. Eligible borrowers for acquisition and rehabilitation loans are qualified nonprofit housing sponsors that are in the process of acquiring a park or that already own a park, or local public entities that are in the process of acquiring a park. Like disaster and rehabilitation loans, the rate is 3% simple interest yearly. Loan payments are also deferred for the full term, and the 0.42% of the loan amount is still required to cover the department's monitoring costs. The $1,000 transaction fee also applies, which may again be waived at the department's discretion. To be eligible for acquisition and rehabilitation loans, the mobile home park at the time of the application must have significant outstanding violations of the Mobile Home Parks Act that threaten the viability of the park, or acquisition or rehabilitation will have substantial benefit to low and moderate income homeowners, and the sponsor also agrees to maintain affordable rents for those low income residents. As previously mentioned, at least 30% of residents at the time of application must have been low income. Also, award is conditioned upon receipt of a permit to operate under the Mobile Home Parks Act. As you can see, the eligible costs include park acquisition, repayment of short-term loans that were used for park acquisition and/or rehabilitation, loan origination, appraisal, inspection fees, and other related financial costs, as well as title and escrow fees, legal and other professional fees, park and/or resident relocation costs, as well as park rehabilitation costs. Next, we'll review the short-term conversion loans. Short-term conversion loans are applied towards the conversion of mobile home park ownership to a qualified resident organization. In addition to the eligible costs listed on this slide, other permissible rehabilitation and repair costs may also be allowed. Eligibility is limited to resident organizations, and the eligible project must be for resident-owned subdivided parks. In the next slide, we'll review the loan terms for short-term conversion loans. Short-term conversion loans are limited to a 3-year maximum term. However, when a local agency acts as an interim owner and in good faith fails to transfer the park to a resident organization or nonprofit sponsor within 3 years, an additional 3 years may be granted. If park ownership is not transferred within 6 years, the MPRROP funds must be repaid to the department. The interest rate is a maximum 3% simple interest, and loans also have a flexible interest rate. Payments for this funding type are interest only during the term of the loan, unless an alternative repayment term has been approved, such as deferred loan payments. The maximum loan amount is 50% of the conversion costs. However, up to 95% of the approved conversion costs of low-income spaces may be approved if conditions are met, such as if funds are necessary for feasibility and efforts to obtain funds from other sources have failed. The maximum loan-to-value ratio is 100% combined loan-to-value, including any senior debt. Now, we've reviewed the first 3 funding types. Next, Brandon Bolden will discuss the blanket and individual loans and mobile home rehabilitation or replacement loans.
Thank you, Gail. As was mentioned, I will start off by discussing blanket loan terms. Now, what do these consist of? Well, this includes loan to a resident organization or nonprofit housing sponsor to repay a short-term bridge conversion loan that does not exceed a 3-year term, or a loan to a resident organization or nonprofit housing sponsor to acquire a park, or a loan to a resident organization or nonprofit housing sponsor to rehabilitate a park in conjunction with acquisition. When it comes to MPRROP financing and senior debt, it cannot exceed 115% combined loan to value. The appraisal must be submitted prior to award. It needs to include as is and subject to completion valuations when acquisition includes rehabilitation. Loan amount is determined by the purchase price times 50% the cost times percentage of low income residents. Repayment terms are maximum 40-year deferred with maximum 3% interest rate. The regulatory agreement will be in place for the term of the loan. The interest on the loan can be deferred in the early years if it is needed for project feasibility. Now we will discuss the individual loan terms. Individual loans can be made to low-income residents for the purchase of their individual space or share. The subdivided interest will be the department's collateral, and a lien will be placed on it as a security for the loan. The maximum loan amount is up to 50% of the acquisition costs of the subdivided space. This does not include the mobile home. The loan terms is up to 40 years deferred for individual homeowners. Now we will discuss the eligibility of the individual loan. This can be an individual, more than one person, or a revocable living trust. They must reside in the park at the time of application as a permanent resident. The gross income cannot exceed the lower income limits for the county where the park is located. They must have the title to the mobile home. All names on the mobile home title will be included for income qualification purposes. An irrevocable trust ownership is not eligible for an individual MPRROP loan. Now we will move on to mobile home rehabilitation or replacement loans. This is a grant to resident organizations or qualified nonprofit housing sponsors that have previously received a loan or loans for the purpose of acquisition or conversion of the mobile home park. The resident organization or nonprofit housing sponsor will then make a loan to the eligible individual homeowner. Now, what can this be used for? Well, loan funds can be used for the following: to repair a mobile home, to make accessibility upgrades to the mobile home, or to replace a mobile home when the repair is not possible. I would like to now introduce Conant Radcliffe, and he will discuss the application.
Thank you, Brandon. Good morning, everyone. My name's Conant Radcliffe. I'll be going over the MPRROP application. Just a note about the application. The application is designed to capture information that shows that your project meets threshold and feasibility requirements. Here you can see the MPRROP application can be found on the MPRROP website. I should mention HCD website, I'm sorry. Application completeness. So as we mentioned earlier in our presentation, we want to encourage you to carefully review the MPRROP statute, the regulations, and the NOFA as you prepare your application. If the application is filled out completely, it's going to really expedite our review here at HCD. I want to make a note of that the application contains cells that are salmon colored. So these salmon colored cells require an attachment. So want to make note of those cells. Hopefully you take note of that, read these cells carefully. On to financial feasibility. So here the department is looking to see their security for the MPRROP loan, that the park conversion provides long-term affordability, and that the MPRROP funds are used in an efficient manner. Next tab is the applicant and project information tab. Here we're trying to establish that an applicant is eligible to apply for the MPRROP program. And again, here you can see the salmon colored cells that indicate more documentation is requested. This next cell, I think or I should mention this next tab, I'm going to reference a cell that you can't see here on this particular slide, but wanted to point out that on row 46, you indicate the activity or activities that you'll be applying for. And you'll notice there are 5 different activities you can apply for. So when you select an activity on row 46, you'll answer questions corresponding to the activity that you're applying for. On to development teams. This form is designed to accommodate a variety of applicant structures. In this particular tab, you complete the contact information that applies to your project. Again, you see salmon colored cells that represent documentation required to support a particular applicant type. Some of the information we are requesting, you may not find that's applicable to your particular project. So that's okay if you leave cells out that aren't applicable to your project here. Moving on to residence analysis. This particular tab is used to determine a project's feasibility. So here we're looking for income information, household size information, and housing expense information. Some of the information we receive here will be transferred onto the project operating budget and the cash flow analysis tab to determine project feasibility. Next we have threshold requirements and standard conditions. Again, this is an opportunity for me to reiterate to please consult with the NOFA, the regulations, and the statute to make sure you have a good understanding of our threshold requirements. Here's the certification and legal status tab. So the person signing here will be the authorized signatory for the application. We'll be looking to see that the same signature is included in other documents throughout the application. Here we have the development sources tab. So if your project includes construction and rehabilitation or rehabilitation, please complete both tables. If your project includes just acquisition, you can complete the permanent sources of funds table. Next, we have the development budget. So this tab simply shows how the MPROP funds as well as other sources are being used in your project. And here we have the operating budget. So this budget was crafted from other forms we've developed at HCD, other programs. So there may be budget lines that aren't applicable to your project. Information from the residence analysis sheet will carry over into the operating budget, and the operating budget information will carry over into the cash flow tab. So here's the cash flow analysis tab. This worksheet gives us an indication of a project's financial feasibility. Here is an important form. It's the payee data record form. This form assists our accounting department. It'll help us deliver funds to you. If you're a nonprofit organization or a resident organization, you'll be completing this form. And please be sure to enter your TIN number in section 3 of this form. I can just say that not having the payee data record can delay the standard agreement and payment process. So please pay attention to the payee data record. On to the government TIN form. Government TIN form is completed by all government agencies. And we're on to application submittal. So here we have instructions for submitting your application. So we're asking that the MPROP application be submitted in Excel format. We're asking that the application be submitted on a thumb drive. So please label the thumb drive with your applicant name. The signature pages can be signed, printed, and sent in PDF format. Our application procedure. So as we mentioned before, this is an over-the-counter application, and applications can be submitted between July 6th of this year, 2020, through January 6th of 2021. No in-person applications will be accepted, and no applications will be accepted after 5 p.m. on January 6th of 2021. Applications must be submitted in Excel format, and supporting documentation should be submitted in PDF format. Again, to mention, this is an over-the-counter NOFA, so applications will be reviewed in the order they are received. We anticipate the initial threshold review will take about 25 working days after receipt of the application. Projects that pass threshold review will move forward to a feasibility review. So if you have questions about the MPROP program, you can send them to our email address as you see here. It's mprop@hcd.ca.gov. And we'll be submitting a list of frequently asked questions, and we'll be hopefully putting them up on the MPROP website as soon as we can. Technical assistance. So we're really excited that we have a new element in this NOFA. The California Coalition for Rural Housing will be providing technical assistance for the MPROP program. California Coalition for Rural Housing has executed a standard agreement with HCD. So their technical assistance contract runs through December 31st of 2021. California Coalition for Rural Housing will provide direct technical assistance to MPROP eligible mobile home park residents and applicants. California Coalition for Rural Housing will also assist with the conversion, acquisition, financing, operation, and improvement of mobile home parks. So if you're interested in contacting California Coalition for Rural Housing, they can be reached at MPROPTA@calruralhousing.org or by phone. And with that, we're now ready to open the floor for questions for what we've discussed in today's presentation. So you can submit your questions to the MPRROP inbox.
Okay, so thank you again. Once again, my name is Mauro and I'm the program manager. Just one more comment about the applications that I wanted to add. The applications need the thumb drive, the applications in the thumb drive with all the supporting documentation does need to be sent to our address here at headquarters, and that's listed in the NOFA. And also the submission needs to be done so that you can get a date and a timestamp when it was received via United States Postal Service or a delivery service such as FedEx or UPS or something like that. Okay, so thank you on that. Thank you to the team.